Good morning, everyone. Hey, Charles, how you doing? Welcome, folks. Welcome to TradingSyndicate.org. I'm JJ, vwaptrader1 on X, and this is where retail traders get perspective and real-world, no BS information from someone who's actually created charts. We try and help you muddle through all the BS in Wall Street spits out and help you actually make a living. What's up, Marcus, Raj, Kevin? Hey, Doc, how are you doing? Pulling another 12-hour shift in the hospital, eh? Bless you guys. Don't know how you guys do it. What's up, Badir? How you feeling? What's up, AO? So, we're going to start out this morning on the old cattle wax. Good thing is, after all this drama, the markets are working well. You get liquidation during the day, and then, you know, they get rid of product at night. So that part's working. You know, it's a little perspective here. This 6807 area I'm looking at, you had big areas of volatility, and this is where we put cost basis together, believe it or not. Now, things have changed. In the old days, these are daily candles, and they're big candles in those areas. We've explored that cost basis twice last year. Went up. So this is accumulation, okay, folks? This is accumulation cost basis. And above 6807 is distribution. So what happens is we acquire product, we go put it on sale at higher prices. People stop wanting to buy it, we put it back on sale, back down to cost basis. And you see it just it's a back and forth business. You know, so we take this, we go sell it, bring it back down, go sell it, bring it back down, put it on sale, go sell it, bring it back down. So let's see what happens in this little shakeout that we've got going. You know, the latest move is that trapped long inventory over 68.90. Now, all of these people who are long, what percentage of them are going to hold? What percentage of them are going to flush out? Well, it's a futures market, so quite a bit of them will, right? You know, it's all speculation. It's a speculative market. So we're going to sit here and go back and forth. We might test 6807. We might test these lows down here under 6800. I have no idea what's going on with this whole Greenland thing. And from what I'm reading now, I only read the Wall Street Journal and Bloomberg. I don't read anything else. The publications that I read, you know, you have to pay for. I don't, you know, look at other stuff. I don't get my news from Twitter. I read Bloomberg and the Wall Street Journal. They're trusted sources. And from what I've read, the larger houses, right? The larger houses are playing defense, right? Smart money is playing defense, right? So what should you filter info, fuel, WB? I'm just going to call you Bob. You guys have these huge long screen names. So, Bob, right? What you need to filter is how do you do business, my friend? Right? How do you trade? Are you a scalper? Are you a long-term trader? Right? Do you swing trade? Are you an investor? So, what you do is you filter out the information, and I'll go through this. We'll go through some trades here. I'm just going through the breakdown of this. Right? You're a scalper? Beautiful. Right? Scalping is beautiful, and it's my specialty because I like getting in and out of situations quickly. Right? We want to look at longer term stuff. For my longer term traders, above 68.37, we're looking to see if we hold that, right? And I'm looking for a test of 6,800. I have no idea. It's only Wednesday. The news cycle we had yesterday was the first day the markets could fully react to all this drama, right? Drama creates cost basis, okay? So what happens is at the end of the year, markets get taken higher because everybody wants their bonus. Everybody gets bonused out. Everybody puts their performance numbers out. What did what's his name make? Last year he pulled in 18 point. What did he pull in? Where is it? Where is it? Where is it? Here. What's our guy done here? Chris Hone, TCI Fund Management made $18.9 billion. So that stuff all is beautiful. Everybody's going to want to get into his fund. Now we've got to start again, right? It's a brand new year. We have to reset cost basis. So generally what happens is some talking head politician will pull some fancy footwork, shake the markets, and it's the same thing. You know, we shake them loose, get cheap product, and then go sell it. So the thing is, how far is the shakeout and how long does it happen, right? Now, you'll look at people who panic sell. Let's look at silver's doing well again. Let's take a look at if you look at stocks like Apple, Microsoft, Nvidia, all of those deals, you're going to see that sure they're down a little bit, but I want you to keep in mind that Apple traded 80 million shares yesterday against a float of 14.75 billion shares. So until you see 900 million shares of Apple going across the tape, you don't have to worry, right? You'll see that inventory is trapped log, it's shaking out, it'll bid. The companies that own 900 million shares of Apple, a billion shares of Apple, they're not going anywhere, right? Unless Apple comes out and says, we're not going to make electronics anymore. We're going to sell cotton candy, right? You get a material change to earnings, then people will dump the stock, right? So those those sorts of things you have to be in mind. These are margin related events. So the selling that you see in these markets, this is margin shakeouts. People who are long using OPM, other people's money, they get shaken out. That's the nature of the business. People who buy stock with cash, they don't get shaken out. Okay. Why do you think Bloomberg and Wall Street Journal are trusted sources? Well, Harris, you're a doctor, right? So the Journal of the American Medical Association, um, publications like Nature, they're trusted sources, right? As opposed to some idiot on Twitter spouting his opinion. Do you know what I mean? The Wall Street Journal has been around since before you were born, and Bloomberg was running a bond desk at Solomon Brothers. These places are Wall Street institutions. It costs 30, 40 grand a year to have a Bloomberg terminal. Those are places that I look to see what the smart money is doing, right? So in markets, you have smart money and you have dumb money. We are dumb money, right? What I'm trying to do is I'm trying to educate you guys so you become smart money, right? So stop looking at Twitter, stop looking at these places to get information. You know, if you want to read about financial news, go to places, you know, that people on a bond desk at JP Morgan are reading, right? That kind of thing, right? Sure, social media has its place, but, you know, after a while, you kind of figure out what's going on. CNBC is just, you know, that's fluff, right? And nobody ever goes on CNBC and actually tells the truth. They all just talk their portfolio. So let's go take a look and see. Tonight, overnight inventory is long. The market is functioning as nature intended, right? The liquidating inventory is taken and sold for profit at night, right? Because market makers had to eat a lot of paper. They had to eat a lot of inventory last night, right? So we're taking that, we're selling it up here. We're in a distribution balance right now. Let's go take a look. So for scalpers, my friend Bob, who's a scalper, what we do is we rely on very, very simple scalping techniques that actually take into account the business, right? So the trades that we rely on are what we call the look below and fail and the look above and fail. So what we do is we draw out cost basis areas where the product is acquired, and then you look at 2 times profit, 4 times profit. Very simple, right? And then we only trade when the market does this. When the market does what we call a look below and fail, we go long, we put our stop here, we go long, we put our stop here, and we sell into the strength. Very, very simple. Very simple, right? When we go short, what we do is we wait for the market to look above a level, come in, you see that there's a seller, you short, you put your stop, cover, 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 right? Our trades are based on common sense and the business. So when you come into my trading room, when you take my mentorship, I don't try and sell you algorithms or, you know, uh, technical indicators or anything. You've got to understand that, you know, when you hear proprietary algorithm, that is code word for Ponzi scheme. So if a trader can't tell you why they take a trade and what the business reason for the trade is, right, and they're your educator, they're full of crap, right? And they're just going to charge you thousands and thousands of dollars, and you're not going to learn anything, and you're not going to make any money, right? Markets are about distribution, right? That's what they're about, right? They're not random, right? You don't put $1 billion on the table and hope it works. That's not how the world works. So all our trades at Trading Syndicate are based on the cold, hard realities of business. Okay? And it's pretty simple, right? It's pretty simple. Markets go up when they're looking for sellers, and they go down when they're looking for buyers. Anything else is total bullshit. Excuse my language. So here you can see we've had a constant seller at this level, right? You can see that. Then the candles are getting lower and lower and lower and lower on the highs. The top of a candle is where the sellers initiate and compete. So if you saw that we couldn't get above 68.57, you short 56, you put your stop above 57, and you go put some bids in at 54, 55, 53. And as the market goes down, your orders will tell you if the trade is working, right? Especially if you're a scalper, it's beautiful. Because if you're short say you were short 56 and a half on 3 or 4 contracts, and you put a 68.55 buy order in, and that buy order gets executed, then you could stay short, right? If you're short 56 and a half and you can't get a fill, if your order cannot be executed at 55, you're just sitting there and nobody's selling to you at 55. It tells you someone is buying 55 and a quarter, right? So contrary to the idiots on Twitter, buyers and sellers do not fight each other. Sellers compete at lower price in order to get rid of their inventory. This is a business about inventory. If your trading educator cannot tell you what inventory is, it means they've never traded it. They don't know what the hell they're talking about. If someone's teaching you volume profile or volume analysis and they've never traded a million share order, they're full of shit. Okay? You have to understand how the business works in order to teach it. If you've never worked in the business, right, you're just asking for trouble because you're taking advice. It's like me going Doc is a doctor. He's been a doctor for decades, right? It's like me going and telling him how to do a mitral valve replacement, right? Hey, Doc, I don't think you're doing this mitral valve replacement right. I think you should be doing this, right? JJ, did you go to medical school? No, actually, I failed anatomy in first year university. Right? You're not, you got to look at the source of the information where you're getting your information, right? And unfortunately, trading education is not policed. It's not licensed. So any moron can come around and tell you that they can teach you how to trade, and just take your money, right? It's pretty bad. So here we've got distribution, right? You don't really need expensive software either. If you look at the bottom of these candles, you can see that there's a bid at 54 half, right? Support is created by unfilled buy orders, right? So the market sellers get down to that level, and if they see a lot of buyers, they will raise price. If they don't see buyers, they will fill these bids. Very simple, right? What's up, Marcus? So now, you see how we're lowering price? So if I was short 56 half, right? I'd have, I'd cover some at 55, 54, 53, and then I'd be looking here, just around this 52 area, and see if we could get a cover here, right? So you might think, well, JJ, that's not a lot of money, but 56 half, if you make a couple of points on 5 E-minis, you're paying your bills. You do that trade a couple of times a day. It's not a bad living, right? So what we do at Trading Syndicate is we teach you how to earn a living. Yes, exactly, Ian. These single prints are an area of supply. That's why the market's kind of stalled out here, right? Now, the reason why we carry those forward into RTH, say we open underneath 68.50, those single prints are valid because there is supply up there. And that supply is going to compete during regular trading hours, right? Just like when you go down and fill single prints in Globex to the downside, and then you come up above them, right? They're still valid because somebody grabbed all the cheap inventory, right? So here, inventory is being sold, right? So that is creating even more what we call overhanging supply, right? So that's the concept of overhang. If we take out 68.50 and get down here to where the inventory is priced. This is where 70% of the overnight inventory is priced. This is distribution for profit. If we break this level and start taking out these stops when London opens, right? That means that these people who got suckered into buying over 50 who are long are going to start puking out. That's why you see the offer moving lower, right? Now, what does that mean? So when I'm a trader, and say Ian and me and Ed and Marcus and Harris and Badir, we all are size traders, right? And say I come in and I've got an order, and they're all selling at 56, 57, and I come in and I offer, and I have 1 million shares to sell, and I put it out for sale at 55 and 3/4. They'll move down to 55 and a half. So we will start price competing because we have size and we need to get rid of it. Especially if it's a client order or our order. Traders do not wait for an invitation to make money. Right? So if if somebody gives me an order to sell 500,000 shares at a price, they say, listen, JJ, sell 500,000 shares for me. Stock's trading at $10. I'll go, what's your bottom? They'll go, try not to get, it's a thin market. Let's not go below $7, right? Because it's not liquid, it's thin. If I'm trading out 500,000 shares and I see a bid at 8 for 200,000 shares, I will hit it so fast it'll make your head spin. And I will go through you like a wrecking ball to get to that bid. So that's the concept of size, and you'll see that when markets liquidate. Size traders will rip your face off and basically eat your flesh to get to a bid faster than you can. That's why we use stops, and that's why we understand market structure, because the structure of these transactions is telling us how sales are going. So we ran out of buyers at 55, we ran out of buyers at 54, we're discounting price down to 51. Remember I told you about this area here? Let's see if that holds. That'll only hold if the sell orders are light. Any kind of size is going to break that, and we're going to come back down to 48. So if you were short 56 and a half, you could stay short. Hey, Jason, how you doing? Belated Happy New Year. How good to see you. Thanks for joining. See, there's a little bit of a bid at 51. There's some orders there. That's why that offer, the red line, is lifting. Right? So if you're a short seller, this red line is your best friend. That red line is what we call the offer. The offer sets the price according to the customers coming in. So if you see the offer steadily moving down, that's what creates, for you trend line traders, that trend line. The trend line, now you know, right? Now you know why a trend line is there. The trend line is created by sellers competing and lowering their price. So that's why when it breaks trend, it means the sellers have seen buyers and they're going to lift price. Now, where are they going to lift price to? To the last place they sold. So you'll look for 54. You'll be looking at these areas here. The sellers will initiate again at 54. Why? Because they don't have 2 or 3 contracts. They have 300. They have 3,000. Right? They have size. Right? They have size. So remember I told you this area was an area of interest. Why was that? Because they see these 2 bottom candles? There was a bid there before. See? Simple. So if I was short 56, 56 and a half, I covered some at 55, 54, maybe I was short 10 contracts. put out a lookout bid at 55, it got hit. Great. My lookout bid at 54 gets hit. Great. I cover the balance of my order, 8 contracts under 53 from 53 to 52. Right? Simple, uncomplicated trading. Right? Is it easy? No. And why would it be easy? Right? It's a system that distributes money for smart people. Right? Sellers are always in control. And it's not a control thing. Right? It's not like a totalitarian government. Sellers set the price according to the customers that are coming in. So George, I want you to close your eyes and pretend that you have 5,000 contracts. Right? But you're not the only guy out there with 5,000 contracts. Jason's got 6,000. Doc has 4,000. Ed's got 3,000. And you're all competing against each other to sell. And you're all trained the same way. You see, institutional traders are trained to do the same thing. We are all taught the same thing. Retail traders all have their different setups and blah, 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 blah. But in the business, there's only one way to do business. So what I teach in my room and in my mentoring is how to trade along with the business. So you see there's a seller? See at the top of that candle, which I missed because I wasn't zoomed in? The sellers are there again. London's opening. So let's see. London generally likes to go lower and get some cheap product, right? If it can't take out that low of K, where this stop is, it'll turn and rotate higher. You see? Like it's doing now. But as it rotates, right, it's going to hit inventory or overhanging supply at these levels. Right? So if you're long, right, if you're long size, you put a few sell orders out just to make sure that your order, right, if you buy something, you want to make sure there's people who are willing to buy it from you at a higher price. Right? So we're still in distribution, and it's telling us the people who are short underneath VWAP, right? The people who are short underneath VWAP are bid to cover here, right? That's Ray driving it down to get cheap product. Exactly, right? So what our job is to figure out where the bid is, right? Like Doc went long because he saw that bid, but he knows that there's going to be sellers here, here, and here. Right? Because there's overhanging supply. We sold these people product and they're stuck there. Right? So it's not a question of control, it's a question of business. Right? So there's seller competition at 54. We knew there was going to be. It's no big surprise. Right? The overnight point of control, where the inventory is priced, 70% of it has moved up from there to 53. Hey, Stuart. Good distribution. Now let's see if we take out that K low. There's the K low stop being taken. Right? As we come down, I'll be looking for this area here. There's a little position here. Just under 49. There should be some bids somewhere here, right? Now, because of the uncertainty in the news cycle, these markets are going to be a little bit more volatile. The order flow or the flow of customers, order flow is a marketing term, okay? It was a term used by market makers because they paid us for order flow, right? But now order flow is a marketing term. It's been taken and sold to retail traders to sell them courses and software and all kinds of BS, right? Order flow is just a fancy marketing term that means the flow of customers. So if you are looking at this, you could see clearly, let me make this bigger. You could see clearly that the sellers are here now, right? They were here, they moved down to here. So they're competing. As sellers compete, price will go lower. It has no choice. Yeah, let's see 47, Jason. Good to see you. You know, we'll see what happens when we get down to that 49 area. So let's see if we could take out 52 and a quarter. There's an offer above it. Does anybody buy it at 52 half? Good. There's a print. There's another print at 3/4. Can we get a 53? Not yet. Seller competition at 52 and 3/4. Watch the red line, ladies and gentlemen. It is the only thing you need to watch. You never go long when the offer is moving lower. You never go short when the offer is moving higher. Simple rule of trading. Why would you short something in an area where the people who own it don't want to sell it? That's how you get those big green candles, is people short in an area where everyone else is buying. If you want to learn how to do this intelligently without any mumbo jumbo and BS, come into our trading room. For people who have been trading for a while and aren't profitable, I'm not going to lie, it's going to hurt your head to use simple business tactics because you've been sold a bill of goods that you need to use this and that and delta, schmelta, you know, all this nonsense, right? But a simple 1 minute candle chart is going to tell you what's going on in the market. This is a map of the city. This is the map of the neighborhood you are in the city. That's why I use both of these charts, right? So now I'm in that neighborhood of 50 to 53. I want to see what's going on. I can't see it really clearly here. That's why you have to combine these TPO charts with a candle chart. If you don't have these TPO charts, market profile charts, all this is a fancy half-hour candle chart where we give each half hour a letter name so we can say, oh, in J period, the J low, right? If that doesn't get taken out, the market's going to reverse and do this. So that's why, see how you get, there's support at 51, right? You see a little bit of support? Those are unfilled buy orders here, right? They're front running 49. So it might chop around a little bit. Now, where's the trade? I would wait for a look below and fail of 47/4, right? If I was really on the ball, I would have taken that short and I would have scalped it on the way down. But I just sat down in front of my computer, maybe about 45 minutes ago. So I'm getting a lay of the land, seeing where the buyers are, where the sellers are initiating, before I actually go and put money to work. I like to watch a market, figure out what's going on, before I just randomly start taking trades. Every trade I take is based on a business decision. When that business decision is no longer valid, when the market tells me I'm wrong, I'm out of the trade, right? That's why we have risk management. Smart money looks at risk. Dumb money thinks about profits, right? You don't have to make a lot of money today. All you have to do is not make any dumbass decisions and lose money. Very simple. When the candles get small like this, it means business is slow. When business is slow, I don't want to just sit there in a position. So I'll wait until the business meets the terms and conditions under which I execute. Right? So we got some bids at 51. Let's see if we can go print that 53 1/4. I want to see if my levels are working. Right? Right? Gamblers think about profit. Professionals think about risk. Right? The dreamers think about profits. The people who make money every day think about risk and manage their risk. They only trade when the trade meets their terms and conditions under which they do business. Right? So there is no FOMO, there's no revenge trading, there's no tilt. Those are all excuses for lack of knowledge, bad discipline, and just dumbass business decisions. Yeah, when it's really slow, Dave, that means don't trade, right? When business is slow, that's for wholesale traders to make money. That's not for us. You have to understand when the market conditions are good for you to do business. Right now, this is not a time for you to enter a trade. There's no business reason to take a trade here. Let the large traders show you where to do business. See how small the candles are? Now, overnight inventory is long, right? It is, where is it? It's probably about 95% long because all of the trading is above the close of yesterday. We are in distribution, right? You can see there's the cost basis I used from yesterday's sell-off, and we're taking this cheap crap here, and we've been selling it all night. So the market's working, right? The market's working as it should. We take the stale donuts, the stale hot dogs, and we sell them to drunk people who are coming out of the club at night, right? When they don't want to buy anymore, we put the crap back on sale, and we'll come back down to cost basis, right? Markets accumulate underneath VWAP, and they distribute above it for profit, right? Accumulation, distribution. The difference is profit. That is how a market works. There is no other reason for a market to exist other than to distribute inventory. The chart is a sales chart that tells you how distribution and sales are going. Very simple. Right? Very simple. Right? Remember I said 49-ish? Right? And we're dropping in. Right? We're dropping in like surfers at Sunset Beach. Right? We're dropping in, we're dropping in, we're dropping in. You can see there's an obvious seller here. Right? Look at that. There are obvious sellers. It's as plain as the nose on your face. Look, there's sellers at 52, 52, 3/4, right? So what do you do if you've got size? You're not just going to sit there like a bump on a log going, if your client calls you and goes, did you sell any? No, it's lower now. Well, guess what? You're fired. You got to move your price down. So when we get back up to this 52, 52 and 3/4 area, you know that they're going to initiate selling again here. Right? Watch the offer. The red line sets the price according to the customers. Now, another stupid thing I hear is, oh, they want the market lower. No, they don't want the market lower, right? They put price on sale to get rid of their inventory. They're not idiots. If you see a huge amount of buyers here, you're going to move your price back up to take advantage of it. That's how commerce works, right? Does it make sense? Your trading has to make sense. If you can't reason out why your trade should be taken and where your trade will not work, you shouldn't be trading. Right? If you don't understand the underlying mechanics of why price moves, and it's pretty frickin' simple. All right? This is not cold fusion. This is not Euclidean geometry. We are not trying to figure out differential equations. Okay? Markets are about distribution of product. Anybody who overcomplicates this, right, is trying just to take your money because they know they can charge you over and over and over again, right? There's one guy I spoke to. He charges people five. He charges them like $5,000 a year and teaches them how to short penny stocks or something like that. And they spent hours doing this, and I know none of them are making money, right? There are other people who charge thousands of dollars for courses. There was a infamous trading academy that was charging. I had friends of mine who paid 30 grand for a week course, and they couldn't trade their way out of a wet paper bag. They didn't even know what a bid and an ask was, right? Just crazy amounts of money, right? Because they know you're not going to make money, and then you're going to keep coming back trying to learn something, and then they'll figure out something new to sell you. I don't know. I don't know these people's names because they're so insignificant that I don't remember their names, right? They're good at marketing and they're really good at taking advantage of people who don't know anything, right? Which I think is criminal, right? If I take down another institution, that's great. It's fair, right? It's war. But screwing over retail traders who are just trying to make a living and who work hard for their money, right? Let's see if that seller's there at 81. Look, they're there, but they raised their price. Big green candle. See, the short covering came in right when we got to this little mini position. They started front running VWAP. So had you been short, right, and you held through this chop, this is a place where you'd be taking profits, right? Would we initiate long here? Maybe on a quick scalp. But, you know, there we go. That is a typical London liquidation. Yeah, nothing against palm trees or supercars, but if the guy's sitting in a tree trading with a laptop, he's taking your money. Right? Right back up to that 52. The big green candle is when the shorts they come in to cover. And there's not enough product. The buyers will raise price. So good call, Ed. Buyers at 49. Beautiful. Let's see if we could go. Nice. See? Couple of big candles. So somebody got short down here. There's an appetite. See? Big green candles, big appetite. And right to that 53, 54 area. See? So had you bought this, you'd sell a little here, you'd sell a little here, and you'd sell a little here. That's how you trade with common sense and intelligence. Right? I told you there'd be sellers here, and there are. Right? Now we're underneath 53. Let's see. The sellers who sell here, they'll start competing. Right? And let's see if we can hold 51. Sure. What happens, Stuart, is say I'm short. Say I'm short here, right? And the market comes down, and I know that there are buyers here because VWAP is here. Now, at nighttime, Stuart, this is called a thin market, right? So if I come in and I start to buy maybe 500 contracts here, everyone's going to jump out of the way. Yeah, don't look at the time and sale, Stuart. Just look at the chart. Focus on this. That's why you're having trouble seeing it. The time in sales is just a speedometer that tells you how fast the market's moving, right? They've taken the time in sales and they've put it in a graphic format that you can see. So you will be able to see when the offer moves higher, right? And this is the thing. If you can keep it simple, you're going to see things that other traders don't see. If you start looking at too many things, your brain can't process it because you haven't trained yourself to process information like that. I can make markets simultaneously in 10 to 20 different stocks because I control the supply. As a retail trader, when I'm trading, even a micro, I don't look at anything else other than where the sellers are. A simple 1-minute candle chart will give you the best information. Nobody believes it because everybody has been suckered into paying for all sorts of stuff, right? All you need to do is put the bid-ask indicator on your chart like this and watch the ask or the offer. Very simple, right? Very simple. If you overcomplicate it, you're going to just, you guys have not been trained to multitask. You guys have not been trained, right? You have not been trained to trade like an institutional trader. Right? Everybody watches The Wolf of Wall Street and thinks that those guys were salesmen. They weren't traders. Right? They were coked up salesmen selling shitty penny stocks to rich people before the internet so those people could only check the price at the end of the day. Right? They were salesmen. They weren't traders. They were salesmen and con men. That's not how trading works. Right? Retail trading is about making observations based on business. If you don't understand the business, don't try and overcomplicate it. Right? Don't try and overcomplicate it because your brain is not trained for it. Right? We will train you on what information you need to know. So had you gone long at 50, stop at 49, you knew that there were going to be sellers at 52, 53, 54. So you would have been selling into that instead of holding on to a losing position. And here's another stupid thing in trading, right? Buying something and putting your stop at break even. No, right? You buy, you put your stop here, and then you sell, sell, sell. If these sell orders don't get taken, you flatten the trade. Why would you let the market come back and take you out at break even? What's the point of even doing business? Putting your stop at break even means you don't have good trade location, you don't know what you're doing, and you're hoping and wishing and praying that trade works. So traders who put their stop at break even have a fundamental problem because they don't understand how the business works. If you understood how the business works, you would be taking smarter trades and you wouldn't have to worry about break even. Right? When you think back upon these things, it will make sense to you guys. You just have to stop thinking about how much money I can make and think about how can I learn to do this without losing all my money and destroying my life. Right? The most important thing about this is understanding when to do business and where. Thanks, Jason. Good to hear from you, brother. So the wholesalers are still selling. Risk is everything. There are entire industries that risk is $1 billion business. Managing risk. You guys ever gone and looked at risk.net? I suggest you do. right? There's an entire industry that is devoted to managing and looking out for risk, right? It's tough trading from the hospital, doc. I know lots of doctors who try and trade from hospital. You've been able to successfully do it, but it's not easy. Ugh. Bit of chop. Cost basis, yeah, exactly, Moran. Yep. So I don't have a setup for this chop right now. So I'll just wait, right? The nice thing about retail trading is that you get to decide when the business is right for you. You don't have to rush into trades, right? You sit and wait for your business to present itself. That's pretty much it for me. Let's see. Have we built up enough buyers to raise price up to 54? That's okay. We'll see what happens at the end of this week, Lear. Oh, look, we got some buyers. We're raising price. Next seller's going to be at 55 and change. There they are. Some more short covering, right? Why are we getting that big green candle? Because a bunch of people went short here, not realizing VWAP was here. They all went to cover at the same time. Boom, right? Distribution continues. Beautiful. And that's it for me this morning, my friends. Have a wonderful day. Thank you for joining us at Trading Syndicate. We are the best value in real trading education. Come join us if you want to make money without all the mumbo jumbo and BS that is rampant and spreading like a bad virus in this market. Hey, Gidget Trader. Thank you, Dottie. Now it's time to get my butt in the gym. Let's see if we can take out that overnight high. Oh, those who are long like the doc, you're looking at 61, 64 and 3/4, and 71 and 3/4. Yeah, I'm starting to feel better, man. This flu really kicked my butt. Stay safe, folks. Don't take candy from strange market makers, okay? We will see you at 9 o'clock Eastern Time. Hey, Robbie, how you doing, brother? I'm almost back to fighting form here. I haven't traded in a week. I did a couple of micros yesterday to see if my brain was working, but I'm very risk averse. So we'll get back on the ball here this week and get to work. Thankfully, I've sorted out my cardiac situation by losing 35 pounds. That always helps. We'll see you folks later. Drop by Trading Syndicate and stay safe out there, folks. Bye for now. Thanks for being with us. Appreciate you guys.